And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison. Yes, we're always working on your financial freedom, and it's my privilege to be joining you today. Today, I'm going to make 4 points. I hope you can stick with me throughout. The first discussion is going to be money versus currency versus investments. Then I want to get into what retirement really is and what it is, and it's a financial condition. It's all about reoccurring cash flow. I want to talk about you getting out of your comfort zone, changing your life for the better. And lastly, I'm not just the only one long on real estate. I've got a recent news article, newsworthy, to discuss. So stick with me through the end. Okay, let's talk about money versus currency versus investments. Money, right? What is money? Well, first of all, money is a medium of exchange, right? It facilitates trade. It eliminates inefficiencies of a barter system. Can you imagine trading chickens for your rent? That's not really easy to do. Money allows for standardized and commonly accepted methods to conduct transactions, right? They need to be standardized. They need to be widely accepted. It is a unit of account, right? It's a consistent measure. It makes it easier to compare the value of goods and services. And it allows prices to be expressed in a single unit, right? That's what facilitates circulation. That's what facilitates economic planning. I'll tell you what money is not. It's not a store of value. If it was a store of value, I could take $10,000, stick it in my closet, come back 30 years from now, and that $10,000 would still have the same buying power. Does anyone think that will happen? Does anyone miss pre-COVID pricing, right? Does anyone miss yesterday's pricing? How much are your groceries today versus yesterday? Does it take more dollars? Of course it does. Anyone out there old enough to remember when gasoline was $1 a gallon? I remember my father freaking out in the 70s. I think gas went to 78 cents or something. I was a little kid, and he was really he was upset about it. He was afraid. It was changing the entire economic status of our family during that time. So yeah, money is not a store of value. If it was, the U.S. dollar would maintain its purchasing power, right? It would not be subject to inflation or deflation. So for an item to be effective as money, it needs to possess certain attributes, right? Durability. I know you can tear a dollar, but for the most part, a dollar holds up to wear and tear. We know coins do. It's got to be portable, right? You got to be able to transport it and transfer it easily. It needs to be divisible. This is important. If money was only one unit, let's say one unit was worth $10,000, it wouldn't be very easy to go purchase groceries, for instance, right? All you have is these large bills. That wouldn't work. Money needs to be uniform, right? One unit needs to be the same as another. I could take a dollar bill from the 70s and put it next to a dollar bill today. Yeah, there's some slight changes, but we would recognize that. I know that some of the larger bills, $100 bills, you can see certain changes, but really those are about preventing counterfeit of those said bills. But for the most part, one would recognize a U.S. dollar compared to one that was printed 50 years ago. Same for the coins. Now, another important characteristic of money, it needs to really have a limited supply. And I'll tell you today, who believes there's a limited supply of U.S. dollars? The government just keeps printing more and more, and not many people are even concerned about it, which more on that later. And money needs to be widely recognized and accepted as a means of payment, right? People recognize it. They realize that that's how trade is conducted, and so they accept it. The only reason a U.S. dollar has any meaning, there's really two reasons that give it meaning. One, you give it meaning. You agree to trade your time and your skills for U.S. dollars, right? A job. You agree to do that. You're not working for food. You're not working for goods. You're not working for services. You're working for dollars. Now, occasionally there's the odd circumstance where that changes. I can think back to my college days when I would need to move from one dorm to another or one apartment to another. I'd get 4 buddies together, and I'd go buy a case or 2 of beer, and I'd say, guys, beer's on me, but I need help moving. So those guys, they weren't working for dollars. They were working for beer. It was a lot of fun, but I tell you what, I never had any trouble getting somebody to help me move back in the college days. Reason number 2 why the U.S. dollar has any meaning is because those said vendors are willing to accept dollars, right? If everyone out there said, nope, I'm not accepting the dollar, everything would come to a screeching halt. So really, those are the 2 reasons. You accept it, you trade your time for those dollars, and on the backside, when you spend those dollars for goods and services, the people you spend it with, they agree to accept it. There are 4 types of money. Let's think about this for a second. There's something called commodity money. That's something with an intrinsic value, gold or silver. There's fiat money. That's money that has value because of a government decree. There is something called representative money, and that's certificates or tokens that can be exchanged for a commodity. Fairly new. That's new to our life. We didn't have digital money years ago. Yes, there's still a lot of people out there that believe that when they go to the bank and deposit $10,000 and everybody else deposits $10,000 or however much money they have, that all that money's sitting there in the vault. Wrong. What happens is it gets converted to a digital deposit. If everyone went to the bank at the same time and said, I'd like my money back, well, there's not enough physical dollars to hand back for all the deposits. Currency is a specific type of money. It's got to be widely accepted, widely circulated within an economy. It's there to facilitate transactions. So the U.S. dollar can be considered both a currency and a money. But a currency really, at the end of the day, is nothing more than a symbol of value. It's nothing more than a symbol, right? Again, those characteristics, it's a legal tender. You have a central authority that says this is the acceptable form of payment, and that central authority will require that that currency be accepted in their jurisdiction, right? Imagine all 50 states in the United States, and 4 of those states said, no, we're not taking that currency anymore. That couldn't happen. We couldn't have that. So the reason is the government says this is our currency and it will be accepted in our jurisdiction. Currency needs to be standard and uniform. We mentioned some of these factors when we were talking about money, but basically needs to be identical to others of the same denomination, right? You can't have green dollar bills and purple dollar bills and yellow dollar bills. It just wouldn't work because it has to be produced to government standards, right, to maintain that uniformity. Now, currency, not necessarily money, but currency needs to be portable and durable, right? It needs to be easy to carry and transfer. I will tell you this, I will share with you this, though. I don't know if you knew, but for decades, when governments would settle their exchanges between one another, they did it in gold. They did it with gold. Do you think gold is easy to carry and exchange? No, it doesn't fit the notion of easy to carry and transfer, but governments would transfer tons of gold amongst one another. And I'm not talking about that long ago. I'm talking about as recent as the previous century. Currency needs to be widely accepted, right? It's got to be used and trusted in that economic area, such as a country, right? Monetary union, the euro comes to mind. So it needs to be widely accepted and backed by that issuing authority. I can take a dollar bill and easily spend it in Mexico, even then, and that's not under U.S. jurisdiction, but they sure take the U.S. dollar. So the question is gold a currency or money? And I'm going to preface this part of the conversation by telling you I'm not a gold bug, okay? I am not in any way, shape, or form, but I need to go through this in this discussion, this money versus currency versus investments. Gold is no longer a currency, all right? Back to that definition Gold is really a form of money. It's a commodity money at best, but it's not a currency, right? Commodity money has to have intrinsic value, okay? So it's a commodity money. There's two massive problems with gold. Gold fluctuates up and down, and it doesn't always go up. In fact, for the last several decades, if you look at it, gold many times didn't even keep up with inflation. You can look at the chart. The other issue with gold is it's pretty much impossible to spend, right? Remember that currency's got to be easy to spend and accepted by others. Now, I know you out there, you're thinking, well, Mike, if I had a handful of gold, I can go get anything I want. Could you? If you think it's a currency, go ahead, change those dollars to gold, and I want you to spend the next 3 weeks of your life paying for everything in gold instead of U.S. dollars. I want you to go to the grocery store, the gas station. I don't even know how you'd buy goods and services online. I want you to pay your mortgage in gold. I want you to go to that restaurant and pay for that nice meal in gold. Now, for this experiment to work, you don't get to overpay, right? I know many of you are out there going, well, I can slap an ounce of gold down and easily my meal would be covered. Yeah, you overpaid, right? For the experiment to work, you need to pay for that value of goods and services. So would not be easy to do at all in any way, shape, or form, right? You still disagree with me? Next time you travel out of the country, let's say you're going to Mexico, right? That's the country du jour that we're talking about. Go to Mexico. Go ahead and take $10,000 worth of gold. Put it in your pocket. Pack it in your bags if you're brave enough. I will tell you, if you're not detained at the airport when you go through customs and you do make it into Mexico with your $10,000 in gold and you start buying Coronas and fajitas and tipping people in gold, I don't see you making it through the afternoon, right? Somebody's going to take that gold from you. So it's definitely not a currency. It's a store. It's a commodity money at best. Now, for the important part of this conversation, money versus currency versus investments, let's talk about what an investment is. Well, the Oxford Dictionary definition, I guess, and I didn't look it up, but an investment really is an asset or item acquired by trading your fiat dollars with the goal of generating income or appreciation in value over time. We buy those investments. There's two ways we buy them. We use leverage, and we use that fiat currency to buy those investments. So the true expectation of an investment is that value is going to appreciate over time. It's going to grow over time. So if you're purchasing investments, you're expecting two things. You're expecting future income, and you're expecting some appreciation of value. Now, to accept those two things, there is a trade-off. What do you accept as the trade-off? You accept some form of risk, right? Not every investment pans out. You also expect a time horizon, right? You can't just jump into every single investment and jump right out that afternoon. So there's a time horizon. Many investments have a timeline before you can get the return of capital. You also you accept a bit of liquidity issues, right? Again, as I mentioned, it's not easier to get in and out. Many times you don't have a say as to when you can get out in certain investments. But millions of people consider the following to be investments. I was one of those people, and I don't. We're going to talk about these: stocks, mutual funds, CDs, commodities, digital currencies, collectibles, and your personal home. Those are not investments.
Lifestyles Unlimited's Real Estate Investor Radio Show returns in a moment. Got questions? Go to lifestylesunlimited.com.
At Lifestyles Unlimited, we teach you the roadmap to retiring in 5 years or less through real estate investing. And you experience the reward of best product, best price, best people, and the difference it makes in your life and the life of others.
Whenever you have residents coming in and thanking you for, taking what was dull and drab and turning it around and making their life better, it's definitely a blessing.
Become a life changer today. Join Lifestyles Unlimited now for $297. That's 60% off the regular price of the Lifestyles Unlimited Financial Freedom Program. Text the word radio to 88007. That's radio to 88007 for 60% off the regular price of the Lifestyles Unlimited Financial Freedom Program. Lifestyles Unlimited. Text radio to 88007.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm Mike Harrison. We're talking about money versus currency versus investments. We got to the investment part. Millions of people consider the following to be investments, and I was one of these people. Stocks, mutual funds, CDs, commodities, gold, silver, digital currencies, as in Bitcoin, collectibles, art, personal home. First of all, my friends, all of these are speculation. And I didn't know that until I started investing in real estate. No one tells you to invest in real estate. They all tell you to get ahead, stocks, mutual funds, CDs, commodities. That's what they tell you, but they never mention real estate. Why is that? This is how you know if it's an investment. It's not an investment unless it has cash flow. Let's talk about what retirement is. I'll tell you, retirement is not a bag of money. It's not saving up and then using said bag of money to live on for the rest of your life. That's not retirement. That's what you're taught. I know it. I'll tell you what retirement is. It's a financial condition. It is reoccurring cash flow. Yet we've been guided our entire life to understand retirement as an age, right? An old age. Just watch the commercials on TV. Go through your favorite magazine. You're going to see the olds in some sort of advertisement that are retired. They're advertising some good or service that would attract retirees, and they show old people in there. They never show young people surfing or jet skiing or hiking or traveling the world. They always show old people because that's what you're supposed to be when you retire. Now, why do they show us old people that are retired? I'll tell you why. Because the system that's designed, if you are saving said bag of money, the common system again, it's going to take you decades to get there. That's why you're old. That's why they show old people in all the advertisements. It's going to take a minimum of their plan 40 to 50 years. I'll also share most people will never get there. How sad is that? That is sad, but true. So if you want to change what retirement is, you've got to change that reward. Do you really want to be old with a bag of depleting wealth that you have to live on? No. Why do we accept that? You'll never be comfortable, right? If you live 30 years in retirement, you're always in the back of your mind going to wonder if you're going to run out of money before you run out of life. That is, you'll never be comfortable. Here's a better philosophy. Why wouldn't you plan for your retirement by creating ongoing cash flow? Cash flow that doesn't deplete. It goes on and on and on. Wealth that grows. It does not deplete. Who's happier? Retiree A. Let's take retiree A. They're 70. Took them 50 years to save $2 million. Congratulations, $2 million. That's going to be more than most. So what can you live on? They teach you can live on 4%, or you risk depreciating that bag of money. I'll share with you, things are getting more and more expensive. You are going to depreciate that bag of money, because if you're retiree A with $2 million, you're going to go put it in what's called safe investments. And I'm throwing up the metaphorical hand quotes around those words. And so when you go into these safe investments, your return goes way down. You take away the risk, but you also take away the return. So retiree A, 70, $2 million, living on $80,000. Pre-tax, by the way. Or let's go to retiree B. Retiree B is 50 years old, has $2 million in cash flowing assets, and those cash flowing assets are paying that retiree anywhere from $80,000 on the low end, potentially $140,000 to $200,000 annually. I see it all the time. Tax-free if done right, by the way. I know who I'd rather be. I'd rather not be retiree A worried every day of my life. And also, retiree A is going to be worth less and less each year. That $80,000 annual dividend that they take from their bag is going to get smaller and smaller over the years. Retiree B, they're going to make more money annually each year. They're going to keep reinvesting and feeding that cash flow snowball. It's going to grow and grow and grow. So back to investments. Mike, you said stocks, mutual funds, commodities, those aren't investments. CDs. No, they're not. Your personal home. No. What investment is going to change that outcome so drastically for retiree B? Well, if you're thinking like I am, you're thinking cash flowing real estate. That's what we teach here at Lifestyles Unlimited. Real estate is the most resilient asset class in the history of humankind. And it meets that historical definition of investment, right? That historical definition I shared earlier is income and appreciation of value, but it also meets the standardized guidelines that we teach here at Lifestyles Unlimited. We tighten it up a little bit and we say, no, if it's an investment, it's got to have cash flow and you can never lose money. You know who else is long on real estate? There's a little firm, and I use that term little facetiously, called KKR, and this is in the news cycle. This just dropped. KKR, Kohlberg, Kravis, Roberts. Who are they? They are a global investment firm renowned for private equity, credit, real estate asset management. They've been around since 1976. They are the 600-pound gorilla, one of the 600-pound gorillas in the financial industry. So if we go to BizNow, here's the title. This is from BizNow magazine. KKR makes a $2.1 billion apartment buy. Again, this is fresh, but KKR has purchased more than 5,000 apartments across the country in one of the biggest deals in that sector, right? It's their biggest bet on the sector. Now, KKR, are they in the charity business? No, they're in the money-making business. So they went and purchased 18 multifamily properties. What did their executives say? This is what their executives say. I'm going to read it. They say, we like the fundamentals of the apartment sector. This portfolio serves high-growth metro areas where new supply will slow down significantly in a few years. So you always want to surround yourself with the smartest people in the room, right? And I'm not saying that these global investment firms are always the smartest, but at a time when all you hear is noise about interest rates, noise about inflation, noise about the fact that there's going to be a downturn in the housing sector, and you get this company that says, well, actually, we think otherwise, and we think otherwise so much that we're going to drop $2.1 billion and go purchase 5,000 apartments. Now, something I mentioned you might not have caught. They're saying new supply will slow down significantly in a few years. We track new apartment builds in certain metro areas, and you can see it. When you build an apartment, a Class A apartment community, you can't build B and C. That's why we invest in B and C type properties. You just can't build them anymore. So the supply of B and C is limited. That's why one of the reasons why we like to invest in those. But they build Class A's. These people that build Class A's, it takes anywhere from 4 to 6 years to build it. So when you're seeing these new apartments being built, that planning went into place a few years prior. Now the new builds are starting to slow down significantly in a few years. And KKR has done their research, and they agree. They also said, quote, we believe this is a great moment to invest in real estate. And let's see, because there's a dislocation in commercial real estate market. So they're seeing the commercial side pare down. They're seeing upside in the housing segment, right? The apartment segment. There's upside in the single family, but it wouldn't. KKR, it would be difficult for a company of that size to buy a significant single-family portfolio, so they're just investing in multifamily portfolios. So you have to ask yourself, why would they invest such a large amount into real estate? Because they're smart. They're doing it to make money. Here's the million-dollar question, friend. Get out of your comfort zone. Why wouldn't you do the same? Now, I'm not saying go buy stock in KKR. Heck no, don't do it. But you can do the same thing that they're doing, and you can buy your own cash flowing real estate portfolio. You can create your own financial conditions. And yes, you're going to have to get out of your comfort zone. But these are the investments that we're talking about. You get the cash flow. You get the future value of growth. You get the tax advantages. By the way, the residents of your properties, you don't even pay the mortgage. Your residents are paying the mortgage for you. They're paying the principal. They're paying the interest. They're paying the taxes. And they're paying the insurance. Why do I believe in real estate? Well, it's simple, friends. Real estate is the greatest wealth creation vehicle known to humankind. Now, when I say that you can do the same thing that KKR did, I know you don't have $2.1 billion to go drop into real estate, but the good news is in real estate, there's a low cost of entry. I see people buy houses all the time for $25,000 out of pocket, often less, sometimes a little bit more, but that's a low cost of entry. So you can do what KKR is. You can go buy these assets. It's an easy process to learn. Anyone that tells you that real estate investing is somehow complicated and just calculus investing kind of stuff, no. Real estate it's much simpler than stock investing. I'll tell you that right now, especially if you're doing stock investing where you're having to research these companies and look at values, look at shares that are out on the market and all that stuff. That's crazy. No, real estate is very easy to analyze. It's very easy process to learn. That's where Lifestyles Unlimited comes in. We are the education and mentoring piece that can show you these processes. We can teach you these processes. We can help you through these processes. We have people you can talk to, people you can ask. We have vendors that specialize in real estate investing. I'll also share, if you're worried, right? You're saying, okay, Mike, I am going to get out of my comfort zone, but I'm worried I'm going to make a mistake. Real estate is so great that the mistakes will self-correct over time. Keep that in mind. Home values historically, and we don't buy for appreciation. We buy for those other great reasons, equity capture, tax advantages, cash flow. But let's say you made a mistake and you paid 50% too much for your house. I don't advocate doing that, okay? In 10 years, you'd still be ahead, okay? Yeah, that's a long timeline, but that's just to give you a basic bird's eye view of how forgiving real estate investing really is. So even minor mistakes are no big deal. Major mistakes, you will still come out ahead if you lengthen your time curve, right? Why don't you just do it right from the beginning and get educated? The cash flow, that's why we do it, okay? What is the cash flow? So you buy a property and you're going to use leverage. Yes, we teach you to use leverage. It's another one of the amazing benefits of real estate. But you're going to buy a property and you're going to have a mortgage on that property, right? I think this is something we're all familiar with, but if you're not, you get a mortgage, and that mortgage has a payment that needs to be made. Let's say it's $1,500 a month, and you're renting your property for $2,000 a month. You're paying the mortgage, you're paying the interest, you're paying the principal, right? That's part of that mortgage. You're paying the property taxes. It's all in there, right? Put it all in there. And what's left over, you're paying the insurance. What's left over is cash flow, right? That is the main reason. It's the cash flow that allows you to buy your life back one piece at a time. It's the cash flow, as I mentioned earlier, that creates the financial condition so that you can retire when you want, as soon as your cash flow is greater than your bills. It is a different philosophy than saving up for retirement. Saving up for retirement is what's taught us, and I'm telling you, it is the worst way to go about to create a financial condition, right? No one wants to be wealthy and all they have to do is trade 50 years for it. No, you want to be wealthy now so that you can enjoy the life. And that's why we always say it's not the money, it's the lifestyle. I'll see you next week. Make it a great day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.